why would a private company, how do they get financed? And why do they go the private route rather than the public route? Well, let me just kind of put this in context for everybody. Over the last 25 years, the number of public companies in the US market has been cut in half. Okay, 25 years ago, we had about 8,000 publicly listed companies. Today, we have just over 4,000 publicly listed companies. And the reason for that is a lot of the regulation that has been brought to bear to be a public company. Sarbanes-Oxley is something that you've heard of in the past. And to adhere to the Sarbanes-Oxley rules and regulations, there are some estimates out there that it may cost a company anywhere from $5 to $7 million a year that could otherwise be net income to a company that they have to spend to be a public company. Okay. There are also kind of quarter to quarter reports and reporting obligations that public companies have. And investors are a little bit fickle. That if a public company, misses an earnings report by 2 cents a share, then, the stock may drop by 3%, 4%, 5%. Really, and that company, when you really think about it, nothing has really changed with that company from yesterday to today, except it's worth 5% less. So that variability, okay, and that investor behavior, and the overall costs of being a public company drive a lot of companies away from that, okay? So what are their other options? In private equity, the private equity business has grown massively over the last 25 years. It is now a $4 trillion industry, okay? $4 trillion have been pumped in to private companies from sovereign wealth funds, from big foundations and endowments, ultra high net worth individuals, family offices, for example. And they are now funding these private companies. And a middle market private company, when they have the choice of, do I want to go through the quarter by quarter scrutiny and all the additional costs and regulations of being a public company, or do I want to be over here and be a partner with a private equity firm? So many more companies are taking that option because they give up no additional control in that. Because when you think of a private equity firm, what a private equity firm is attracted to a private company because of the success it's had. So, and they've seen that success over the last 3, 4, 5, 10 years, and they want to invest in that success and enjoy that success with that private company. So traditionally, private equity firms, they may buy that company, they may buy 100% of that company, but they want the management team to do what they've been doing, the exact same thing that they've been doing for since inception. Because that's what's generated so much growth. And so they generally don't put any constraints on a company, and they try to help that company to the extent they can, provide guidance and support and relationships to that company, because they're now an investor and they want it to grow even faster. And so whatever they can do to support that private company, they will do.
Starting your route to retirement.